You mentioned the accounting and being an accountant. I have to ask this question: how do you actually get the accounting done? Is that something that you do? You participate in yourself? Do you outsource it out? And also, you mentioned software earlier that you had a really great software. So I'd love to hear whatever you can share with our audience about any of that.
Sure. So I use Rent Manager. It does everything, my reporting, my 1099s, my everything. And I can do bank reconciliations and journal entries, and I can automate a lot of things too, which is phenomenal. Then my CPA can log in behind me, check, make sure the balance sheets are okay, profit and losses are right. And obviously he double checks too that the bank statements match my P&Ls and everything else, so the reconciliations work. So I do really basic stuff. I don't do the heavier lift stuff that I leave to the professionals because I'm a salesman by trade. I have my MBA, which all that means is I've taken a couple of classes in accounting. That doesn't mean I am good at it. It just
Yeah.
means for now, one of the best bits of advice I got was from a book called Street Smarts, which is I highly recommend, which
Norms,
is
right? Yeah.
I forget who wrote it, but
Yeah.
he
Yeah.
was on the Inc. 500 or the Inc. 100
Yes. Yeah.
several times, and that book is just awesome. And he's like, dude, you need to do your own accounting, and here's why. And he's like, you will understand your business like by being in the mundane and boring. And my business partner he hates accounting, so he's like, dude, just outsource it, hire a bookkeeper. And I'm like, eventually we'll have to. But right now, we need to continue to learn from what's literally right in front of our faces. And even still, if we're lucky enough to get super duper big, and I have maybe several accountants, I still am going to want to be really nitty gritty with accounting. If nothing else, just doing bank reconciliations, just so I can really keep a finger on the pulse of my companies and what's going on.
Yeah, that's great. Thank you. Um, so take us back a little bit to when you originally started the business. I imagine it took some capital to get that going. Did you have investors, or did you bootstrap it somehow?
Yeah, so I started with nothing. I had like $30,000. I had more student loan debt than I had cash. And my first acquisition was a $1.5 million mobile home park, 89 lots. Yeah, forget it. I was not getting that loan. Hey, you got an MBA, Wake Forest University. You're smart. You're motivated. You're 29 years old, 28 years old at the time. I turned 29 while we had under contract. They didn't care. Banks don't care. All they care about is risk. All they care about is not losing their job.
Right.
So we partnered with some experienced operators that had been at it for about 10 years. And basically we were like, look, there are three parts to any deal, any real estate deal. Three legs. It's like a three-legged table. Any of the three legs are missing, the whole thing falls down. You have to have a willing seller, someone who owns a piece of property who goes, okay, I'll sell it to you. And you have to bring this person money. And then afterwards, someone has to collect the rents and operate it, right? So in other words, what could I do at 28, 29 years old with no money? First and foremost, could I bring, as a former car salesman, someone to the table who'd be willing to sell for a reasonable price? The answer unequivocally was yes. And so we've sourced almost all of our deals off market by building relationships with sellers. So in other words, yes. And not only that, because I am bringing value to the table by being establishing these relationships, that's worth money. And when you don't have money and you can do something that's worth money, that's called monetization. If you can tap into that. So for our first deal ever, we got what was called an acquisition fee. And so basically what we asked with this partnership was like, hey, look, we don't know how to operate, so we can't do the other leg. Obviously, we don't have any money, so we can't do two out of the three legs, but we brought you a deal. Can we cash this finder's fee out and leave a hair in so we can learn from you? And they were like, yeah, totally. So then that way, our second mobile home park acquisition was actually our first, in the regard that we took that acquisition fee and bought our own property with that. And then from there, we scaled up. And from there, we were owner operators, so we paid ourselves the offsite fee, the offsite property management fee, and then our third one, we quit our jobs and moved to that property and paid ourselves the on-site salary too, so we could eat. And then from there, we refinanced our properties. We sold off some of our properties. We had enough capital after several years to now be able to really start to seriously scale. And what we also realized is, so we pay ourselves $35,000 a year now. We haven't increased that, even though we make more than that. And the reason is because there was some fire that was lit under me when I was like, I have millions of recourse debt over my head, and I still do. And I'm living in a mobile home, and I'm getting paid $35,000 a year. Like, there's a certain fire under my butt that I don't want to get rid of by increasing my take-home pay. So I reinvest every penny I make above and beyond that. Now, eventually I'll pay myself more than that. But
Sure, yeah.
As long as it is working and my business is scaling, I see no reason to change what I'm doing, especially if it's motivating me.
Yeah, that kind of discipline is usually what it takes. That's amazing. Well, good for you. That's wonderful to hear.